He studied computer science in Texas, followed by MBA under legendary professor C.K. Prahlad. Kiran Wadhwana's journey is an interesting mix of knowledge, trade, computer science, technology, and more. Upon returning to India, he joined his family business and made a mark as a trader. Today is the chair of Bonsucro, the company that helps produce sugar sustainably around the world. Welcome, sir. Great to have you on the show. This is the ChiniMandi Podcast. I am Shri Raman. So thank you for being on our show today. It's my pleasure to have you here.
Thank you.
So let's start with some of the realities of sugar trading in India. You have been at it for decades.
Right.
And as a sugar trader, we have very limited options for hedging today, right? In terms of futures and options and so on. What is your opinion on that?
See, why would you want to hedge? The whole thing is government is giving you the biggest hedge.
Okay.
Called the domestic quota release system. That's a hedge because that makes sure that the price of sugar remains within a certain band. Government does that. It's technically a free hedge for you. Anywhere else in a futures market, if I had to hedge, I had to put in margins.
Right.
And I have to, if the market goes against me, I have to keep on putting in money. The government is giving you a totally free hedge. So if you look at it from the quota system as a hedge, that's what it is. It's not the hedge that normal traders internationally elsewhere look at. But, since the government wants to make sure that the retail price of sugar is in a certain band, it's done this quota release system. And to me, that's the biggest hedge you have. It's not, you don't need to have a futures market for this hedge.
Very interesting and optimistic take, sir. But won't it allow for, let's say, farmers to plan more and produce more, or for traders to, ensure there is a future certainty of the commodity that they need?
See, it's very clear. Farmers have no problem because the government has fixed the price 1 year in advance. So when he's planting, he knows what he's going to get for cane next year.
Right.
His problem is not the price. His problem is the weather and the other climatic conditions which
that no one can control.
No one can control.
Right.
But as far as price hedging is concerned, whether it is the cane price or the sugar price, it is the most hedged commodity anywhere in the world. Nowhere will you get that everything is hedged. You just have to produce it efficiently. That's it. So in many ways, you can't have a better system, and it doesn't cost you anything to hedge.
Right.
Right. So anywhere else in the world, if I was a Brazilian miller or trader, I would need to use the futures market to hedge my product. Here, the government is sitting there. No, he's giving you a free hedge. So what more do you look at it?
So who are the biggest beneficiaries of this? I would side with farmers in one angle.
No, beneficiary is whoever can produce it efficiently.
Right.
Now, whether it's a farmer or the miller, whoever can control his costs and product, because you know what your prices are, right? It's like as a farmer, I know I'm going to get this FRP, this price, right? If I produce my cane, I get a better yield, I get better recovery and everything. I'm going to get, I'm assured of a high price.
Right.
Right. I'm also assured that the price will not fall below. Now, the best way out for me is to just get a better, yield per acre. The more yield per acre means the better income I have. Same is on the sugar side. If I produce my sugar efficiently, if I make sure that my machines are done efficiently, I'll get, because I know government is going to keep the end price at certain level. My input cane price is fixed. So I know where, I'm kind of hedged technically on both sides. So everybody looks, they know hedging mechanism, but there is the natural hedge. The government is giving you the hedge and doesn't cost you anything.
Right. And could you give us a little backstory about how this came to be? Because few years ago, we did have a technical
yes,
or the regular
if you
hedge.
go back 30, 40 years ago,
yeah.
Government was controlling everything. Industry kept saying decontrol, decontrol, decontrol. About 15 years ago, maybe 17 years ago, government actually decontrolled price of sugar. Mm-hmm. But they kept the price of cane fixed.
Right.
Now, the problem with that is everywhere in the world, wherever the sugar price floats and there's no control, the cane price is linked to the sugar price. Mm-hmm. Right. So, unfortunately, in India, government didn't want to take the risk of the price of sugar crashing and eventually the price of cane would also go down. So government said, no, cane price is fixed. This is a minimum. You can give higher, but you can't give lower than it. Now, if the sugar price goes down, and when you have no control, there will be mills weak mills will come and sell below the minimum price or whatever. So the mills actually got together, went to government. Listen, we want controls back. We want minimum sugar price and all of this. So that's what government did about 15 years ago. But what the government did not do is increase the minimum sugar price. They kept doing the control on the release mechanism, but that's where it is. So right now, there is a natural hedge. I mean, if that's what you want to call it.
Right. So despite all this natural hedge and systematic reform, we see always, about 50% our mills are operational or doing something. Other 50 is, not producing anything. Where does this come from?
See, it totally depends on the management of the mill, right? I mean, whether it is private sector or cooperative sector, there are always going to be people who are more efficient and people who are not that efficient. But unfortunately, because of our setup, inefficient mill is made to move, and the average of the efficient and inefficient mills is taken to do the pricing of the sugar and do the pricing of the cane. So with all of that happening, you are, you're making sure that if you are efficient, you are going to survive and do well.
It doesn't depend on the pricing mechanism as much as it depends on your own efficiency of running your mill.
Correct. And management, the management is, if they think out of the box, they think in the forward, then you will find mills, this thing, doing well. And if you are inward looking and you don't do it, then it will remain where you are.
Right. Sir, also as a trader worldwide, let's say you can plan or hedge based on demand supply, but in India, it is more policy driven. So how do you feel as a trader?
See, I'm not per se a trader myself, but for a trader's
point of view.
From a trader's point of view, with the release mechanism, you have a sense of what the price band is. So if the sugar is going to move out of that price band, then you as a trader would want to take go long or short based on what you are doing. But generally, I have found that traders in this country normally are not holding on, not taking positions on sugar, not much.
Right.
Very little kind of positions are taken, mainly because of this natural hedge of the quota release system. So
no, but therein lies a little bit of wish list, if I might say, that they can't find any arbitrage, they can't find any delta, alpha, or whatever you want to call it as.
Correct.
So that because that is worldwide, it's controlled by demand supply, but here it's policy driven, right?
Correct. So that is the thing. So what does a trader will have to go with more or less what he expects a policy. Yes, there would be years in which there is huge shortage or huge surplus where the trader could make some this thing. But then government also understands these huge policy, surpluses and deficits, and will move their policy accordingly, So there's not much for a trader.
Yes, that is the wish list that they want.
Yeah, but then you don't trade in India, you trade outside, no?
Outside, yeah.
India produces 30 million tons out of 180 million tons that's produced worldwide, right? So, now it's easy for any trader to go out and trade internationally if he's looking at all these hedging things. But, you can't get more comfortable than what you are in India with government taking care of all the costs of hedging. So, that's how I look at it.
So, it is a gift then a boon then a bane in that sense.
Yes, if you look at it that way,
right.
You must understand, for the first 30 years, when I joined 40 years ago, first 20-25 years, we as millers used to scream, decontrol, decontrol, decontrol.
This was the License Raj era.
License Raj era. After the License Raj, also decontrol, decontrol. The moment government comes and does decontrol, you turn around and say, no, please control. Okay, I don't blame the millers for that. Right. Because you only decontrol the sugar price and the sugar release. You control the cane price. Now, if the sugar prices go below your ability to pay and your cane prices are kept high, you're not going to do this thing. So the only way out...
Imbalance is much worse. Yes.
Yeah, the imbalance. So that's why they went back and said, boss, bring back your controls and all that. And that's what happened.
Right.
And I think in a country like India where you have to protect the farmer, where you cannot tell the farmer, listen, your price is going to be linked to sugar price, you will have to control both ends. And that's the only way out, because you have 5 million plus farmers.
Yes, the largest sugar farmers are from India.
Correct. Number of farmers.
Number of farmers. Yeah.
Correct. So that is the reason.
50 million, sir. 5 crore. Yeah.
50 million. Sorry. So with that kind of farming farmers base here, you're not going to find the situation where the government can, tell the farmer that, listen, it's going to be linked to sugar price.
So it's rightfully biased towards the 50 million farmers. It's size of a small European country. Then about 10,000 traders, right? So
yeah, it's two-thirds of all parliamentary constituencies have a sugar mill.
Of course.
And each sugar mill has 50,000 approximate farmers. So you should understand that scale.
That
and they are the politically strong people in the rural areas, right? Because they have the major resources. So that's why they would. It has to be politically good.
No, not just their sentiment, but their livelihood is also key.
Correct.
There is no point in being a populist after taking away their livelihood. Then you give populist measure. That doesn't make any sense.
Correct. Exactly.
Talking about sugar and export and ethanol, the combination of all this, right? So sometimes we go on and off in terms of export, in terms of diverting it towards ethanol. What is happening? What's your take on it?
I don't think it's on and off. The thing is, because you have a controlled domestic market, they have to control the exports. It's another part of control.
Mm-hmm.
Now, number one, government policy is very clear. First, you have to make sure there is enough sugar for domestic consumption. Then, whatever can be in addition to that, the next step is diversion.
Right.
To ethanol. Now, ethanol, they had hoping to, the capacities are more, they can do more, but they are getting curbed by 20% blending, which was supposed.
That's right. That's a great issue by.
Yeah, so there's just so much you can blend because you have to take care of the grains and all of that. So that is the next step. Anything that is left after that will go for exports.
Right.
I think that is a very clear government policy. Now, it's only a question of timing that one is to worry about. What does the government feel about the crop? How much is the gross number? What will be diverted and what will be the sugar left over? And then based on what is left over, how much is going to be domestic consumption? So balance is available for export. So, government goes through a very methodical way of doing this. It's not ad hoc. But for somebody living outside where there is,
from an outsider's perspective,
it becomes on and off.
Right.
But the government policy is very clear. The thought process is clear. They will do it only when they're clear about any surplus left. Because we are not an export-driven market.
Right.
We are an internal-driven market, right? But see, if you look at Brazil and Thailand, the two big guys. Brazil exports, they produce 40 million plus tons of sugar. They consume 10 million. So 30 million
is
a definite surplus for them.
Right.
This is after having done ethanol and all that. On the other hand, Thailand consumes 2 or 3 million tons and they produce about 10 to 12 million. So they have to export the balance, right?
We consume mostly 27, 28 million.
Yeah, so we may be surplus 1 or 2 million. So, we are an internal driven market. We are not an external driven market. Whereas these two countries are. It's the same like you take a country like South Korea or India. South Korea is export driven market. America switches off. They have a big problem.
Right.
India.
The IT services.
You charge for 40%, 50% import duty, we're still sitting tight. So the point at the end of the day is, where is our market? Our market is India. It's not driven by outside. Whereas for Thailand and Brazil, it is driven by what consumers outside.
I'm also in between. There was some on and off for ethanol diversion itself, right? So how much sugar or sugar-related products?
Exactly. Simply because when you have a lower cost, lower production, the first thing you want to do is make sure there is enough for domestic.
Sufficiency for domestic consumption.
So once you're clear on domestic consumption, then you'll allow diversion, then you'll allow exports. So and plus, again, you must also understand that whenever you have an election overhang, you want to make sure that there is enough sugar, come what may.
Right.
You want surplus sugar,
not deficit. Yeah.
So when you had the 2024 elections, you did not want to you wanted to make sure that there was enough sugar. So you reduced diversion to ethanol totally. So all of that is going to happen. That's part of politics. I mean, and you...
Some mix of, reality and politics.
Politics. So you have to realize, even though they had enough sugar, they ensured that there was no ethanol being made so that there is enough domestic sugar. But the next year around, they understood that there was enough sugar and they took a decision on export, even though the production numbers were falling.
Right.
So one has to be clear on the thought process. And the thought process is domestic market number 1, ethanol number 2, and balance is for exports.
Understood. So that being said, we have somewhere between 1 to 2 million metric ton to export.
For this year, you're talking 26.
Yes. So yet India is called as a swing factor, or even global trading companies take India seriously from that point of view, despite having a small quantum of sugar to be available for export. What is going on?
I'll tell you. The world trade is between 50 and 60 million tons of physical sugar.
Okay.
We, in the next year, we'll do 1 million or 2 million tons. Technically, it shouldn't make, you're 2% or whatever this is that. It should not make a big difference from the face of it. But it is not that, but how we do the export that makes all the difference. See, Brazil has already sold all current crop, even 70% of its next crop.
Mm-hmm.
Thailand hedges through tender hedging, so they also have sold forward. Everybody's sold a crop
forward. Yeah.
We can only sell when the government tells you to sell. I mean,
it's a spot.
We are a spot seller.
Yes.
Now, when you are a spot seller and you decide to sell 1 million tons, you come in and hit the market 1 million tons. On a 50 million market or a 60 million market, you make a big difference with that 1 million, because either people didn't expect it, or even if they expect, they didn't know when exactly this will come out. So it makes a big difference to the world, and we swing the market a lot either way, you know. Or the other way is also true.
How is it either way?
The other way is that if we are supposed to, if the world expects us to export, and government doesn't decide to export, supposing, give you an example. World is expecting that in November this year we might allow exports. Government doesn't allow exports till March.
Right.
What happens to the market? Market, will definitely take off.
Contracts will end and
so people will then want the price to go up. And government can decide, I don't think the crop is enough, I'm going to wait till March. So then people who are expecting the exports, so it goes the other way around. Or, people are expecting
to export. Maybe let's say 2 becomes 2.5. Then the drama is different, right?
Yeah, it's not, drama is different, it's different. It's the timing is a big issue, right? And if our government may decide, let it all go into stock, we've held 8 million tons, you're having 2 million extra, so we'll go to 7 million tons. What is wrong after 5? I mean, see, you have to understand what government thinks through. It may think differently, So one has to be very clear that, and that is why we make this huge swing factor, that both ways. Either everybody expects us to export and we delay our exports, or nobody expects us to export.
Suddenly we open up a quota, right?
Exports. So these are so that's why, the world market is very much looking at India all the time. What are we going to do and when are we going to do it?
So who's winning here in this scenario? I would say mostly us.
Well, winning in what sense? I mean, that's the question.
Okay, in terms of when the export is allowed, I would say we are winning.
Yeah. Well, it depends. See, you are winning only if there's parity on exports. No? If your domestic prices are like today,
as good as export, then there is no difference.
Yeah. So it all depends on how it is. Like last year, we didn't allow export. It was decided that we might not export, right? All of a sudden, Jan 20th, it was there, and there was a shortage in the market which we kind of filled up.
Right.
So you saw prices rise. So we all got huge premiums on exports. But some traders went berserk and they bought a lot more quota than they could have done. And then the market crapped out and they all got stuck. So that is going to happen. That's the thing. I mean, and Indian traders would not hedge. Having not hedged the sugar, they got stuck in many ways.
I'm saying when the export is allowed, assuming the world needs it, right? So it's a windfall for our farmers, windfall for traders.
Yes. But you're looking at 1 or 2 million tons of export out of production of 35 million tons. So it helps the sentiment in the domestic market to go up. But beyond that, it's not that they get more cash. I mean, the prices go up. Like you saw that when 20th January it allowed export, domestic prices went up by 3 or 4 rupees a kilo. That is the bonanza they get. But had that not happened, export not happened, the prices would have really remained low. So that's the thing you get. Your domestic prices go up because of exports, not that the export is giving them money. I mean, because the export volume is limited, so they get only that much in terms of money. But the domestic market,
since that impacts the domestic, so that makes up for the windfall.
Correct, exactly.
So talking about ethanol a little more, there's been an increase in, or nearly double the quantity of ethanol being produced now from grain than from sugar.
Right.
What's the trend? How do you see this shaping in future?
Again, it all depends on government policy, number one. When 2 years ago, when sugar fell short, government felt that to make up for that, they should incentivize grain ethanol. And to do that incentive-wise, they actually increase the capacities.
Right.
Once you increase capacity, you had prices of grains, like you had maize prices that went from 12 rupees to 24 rupees.
Yes.
So obviously the farmer is then going to increase area under maize, which helped because of the ethanol pricing. Now, having done all that, obviously grain capacity, and once you signed agreements with the grain people, and grain is able to supply ethanol. So in your 11-12 billion liters of ethanol that's required for 20% blending, you have only about 4 billion to odd from sugar-based feedstock. The balance is coming from other based feedstock. So that is the way it has the cookie crumbled. But most of the large millers that I know of have all got dual feedstock. So they can move to grains.
They're de-risked at the feedstock level.
Yeah, because becoming flexible, right? I mean, it makes more sense that at least my distillery is running by having a dual feedstock distillery. And
because they all put in a huge capex.
Correct.
Especially considering a lot of sugar could be diverted towards ethanol.
Yeah, so it all depends on the market. See, at the end of the day, what makes more sense? So you will have to go flexible. I mean, if I have a dual feedstock, if grains are making more sense, then I'll do it with grains. If sugar is making more sense, I'll do it with sugar. That is number one. Number two, as of now, we have multiple prices for multiple feedstock.
I was just coming to that, yes. Yeah. So that also impacts which feedstock you would prefer.
Correct. So now, going forward, like we saw yesterday, you had 6 rates of GST. Now they're down to 4 and whatever.
Yeah.
So you will have a similar situation happening in these sugar ethanol rates. You and sugar grain ethanol rates. You have 6 or some odd right now. I would assume that they'll bring it down to 4 and then eventually to 1.
Because the final product being the same.
Correct. So you can't just have multiple prices.
Does it matter how I produce it? Yes.
Correct. So I will produce then on the basis of what makes most sense on that given day. And that given day will, I know what the price of ethanol, then I'll decide which feedstock to use. And that will mean that every unit that is there should be flexible to use any of the feedstock. The more flexible you are, the better off you are going forward.
So on the question of capex, and you also mentioned we need about 12 billion liters of ethanol, but we are already producing around 18.
Yeah, we have capacity for 18.
18, yeah. So given there is a consumer sentiment around E20, given that there is capex, won't we have like a surplus amount of everything, whether the infrastructure, grain, or the sugar?
Yes, I think there is a surplus capacity, number one. Number two, but we have to now look beyond E20. I mean, the thing is, government is giving incentives for EVs.
Right.
They can give the same incentive to flex fuel vehicles. So once you have flex fuel vehicles, then your consumption of ethanol can go up.
True. The success of solar was based on incentive. Even the PM Kusum scheme, I think, for farmlands to use solar and so on and so forth.
Correct. So you are already giving it for one type of vehicle,
Right.
EV, which actually is using electricity, which is using coal,
That's
smokestack,
That's
right?
Yeah. 70% of India's power is coal generated.
Correct. So that 70% of that power, EVs are actually smokestack power.
Right.
So why can't we give, they're saying, in a flex fuel vehicle, you still use some petrol and you still have tailpipe guys. That's fine. But it's a lot better than this.
More coal somewhere else. Right?
Yeah. So if you make the FFV having the same incentive as an EV, you will increase, there are almost 19 different models ready to be launched. The moment this is done, then you will see ethanol, 18 billion, you'll need 25, 30 billion liters going forward.
Yeah.
Because and not immediately, I'm talking 5-7 years down the line.
5 years is a very short time in
Correct. So you will have more need for ethanol going forward. And we are still only talking about ethanol mixing with petrol.
Right.
They're doing a lot of research on ethanol with diesel. So that is the other area. But there is going to be eventually enough requirement for ethanol going forward.
There's no question of over-sufficiency or,
No. You will always see any growth. There will be a couple of years where the capacities are more than requirements, and then the requirement becomes more than the capacity. But that is going to go back and forth as you move forward. But these are all temporary issues.
Right.
The future is, you have to look at the future. Future is definitely towards this, and you will have to. Building more capacity will keep on happening,
Right.
and more production will require. It's just a question of the government turning around and saying, okay, FFV is allowed. The technology is there. It's not new technology. It's all done. Brazil is doing it brilliantly. It's just getting it implemented here.
There were comments from positive encouragement from 2 ministries, in fact, that India should become an ethanol exporter. But my take is same as yours. The rate at which we are going, we might need more for ourselves.
Ethanol export is difficult because the pricing, world market price is much lower than our ethanol domestic price. So, and we have kept our domestic ethanol prices high to incentivize production.
Right.
So for us to export ethanol at this stage is going to be difficult.
Maybe with more industrialization, the prices are at par with
eventually
the added transport cost.
Eventually it will happen. Just like we do export sugar and we do export grains and all that. We'll also export ethanol. The question is, it will take some time. It's not going to happen tomorrow.
Sir, you have been on trading side, running a sugar mill, on sustainability side. You have seen all of it. So if somebody is wanting to get into an agro-entrepreneurship today, at anywhere in the value chain, right? What are some of the mentorship you would provide them?
I think anybody getting into any chain, the thing is you need to be clear about your environment. You've got to be clear on which side the movements are happening.
Okay.
You're seeing now slowly renewable energy, you're looking at sustainability. These are becoming the big things. So anybody getting in now and looking in the next 10-15 years, those are the areas that should be the kind of value, supply chain.
Sustainability is not an afterthought anymore.
Not anymore. Right. Especially what's happening outside India. And now India is also looking at sustainability, and you have ESG reporting by the big companies. So everybody has to move in at some point, in that way. Now, how it is done and all that you need to decide. But at the end of the day, these are the things, being renewable, being sustainable. These are areas where anybody coming in today, I would, advise them to get onto that.
Right. But anywhere you recommend where they should play in the value chain, at the farm production level or at the trade arbitrage level, where the risks are very differently stacked?
See, the highest risk is on the farm level.
Right.
Because though the government is giving you a fixed price and all that,
there's a lot of hope involved.
A lot of hope. Not only that, but the weather, and there's a lot of things that you have no control on.
Yeah, hope it rains.
Though the price he gives you, but your production levels will depend. So the highest risk is there. Most difficult one is there. It depends on what your background. If you are a consummate farmer and you really want to do well on the farm, then you do. The advantage of the farmer is that if the cane isn't suitable to you, can switch over to another crop.
Right.
But if you're in a sugar mill, you can only crush sugarcane. You can't crush anything else. So,
But even there, people have, I mean, everything that comes inside a sugar mill has a lot of value.
correct.
Everything.
So,
And
so you can only crush cane. So you're dependent on one raw material.
Right.
But your products can be various.
Many, yeah.
Now, if you have problem with your raw material, then you have a problem because then you can't make any other products, right? So that's the other kind of risk. Whereas a farmer can make any product and sell to any other market, right? His land is his.
Yeah, with intercropping, that's how maize got to be.
Correct, intercropping or whatever else. I mean, he can actually get out of cane and put other crops, right? So his base material is land and water, right? So from that he can produce anything. As a sugar mill, I only
Put
cane.
in a capex and you're waiting for that raw material.
Correct. So that's the risk here. As you get a trade you can trade any commodity, and you just have to be smart enough to understand what the government and what policies are coming, so you trade accordingly. Understand the crop sizes for whichever crops you're doing. So it all depends on what your mental makeup is. I mean, there are people who can take the risk of a sugar mill, and people who are risk as a farmer and risk as a trader. So I think it's your personality. But whichever side you are, whether you're farm or you're trade or you have to understand the environment, the policy, to be keeping abreast of that to be able to perform or do well.
Sir, talking about sustainability, wearing your Bonsucro hat, let's talk about the image sugar has globally, right? Water guzzler, deforestation or land guzzling, even history of slavery. Where do we stand today?
To what you're saying is partially correct. These terms that have been added to sugar are correct, but not so correct today. See, sugar is grown in over 150 countries worldwide, right?
Yeah.
And we've seen in some countries it's very efficient and in some countries very inefficient. Now, I'm talking about sugarcane. Now, when you look at the efficiencies, you can get much lower water consumption. We've seen in Bonsucro certified farms, over 5 years, they reduced water consumption by 42%.
That's impressive.
Yeah. This is mainly because of management. So, what is called water guzzling is actually, if it is managed well, can really be reduced. I mean, if you go between flood irrigation and drip irrigation, a lot of water management can be easily done. Or for that matter, even in terms of labor management, a lot of the harvesting labor was very badly abused many years ago.
Right.
Today, there are enough laws and enough managements who understand that you have to take care and follow the law and ensure that the labor is taken care of. So all of that is not correct anymore. Obviously, slavery was how it started, but if you look at it today, things are much more different, and going forward, we expect it to get better.
How does India stack against the world out of this 150 countries in terms of sustainability?
India is just starting off. In comparison, our biggest one is Brazil. Then it is Brazil, almost 20% of the cane is certified.
Bonsucro certified.
Yeah,
we have about 30 or so. Right?
Yeah, we are only less than 5% in terms of, they are 20% of the cane certified, we are less than 5% certified.
So we are just getting started.
We are just getting started.
Okay.
Brazil, a lot of mills are certified. We have only 30 members, but only 14.
30 members, but 14 certified.
14 certified.
Right.
The other balance are getting, the certification process takes a while. So the others will slowly get. So we got 30 members.
It's not just handing them a piece of paper.
No. It is a process. It takes a couple of years before you can actually become a full, certified member, production member. So it'll take its time. It's a process.
How's the momentum?
Pretty good. In fact, I got a call yesterday. People want Bonsucro certified. Please tell how to go about it.
Right.
And the most biggest thing is that Bonsucro is having a Bonsucro Global Week in India for the first time.
Excellent.
In March of 2026 in Delhi itself. So that will bring more awareness of sustainability within this country. So I think that will be the big boost going forward.
Right. So, given this momentum, is there an opportunity for India to, let's say, command a premium for the sugar produced here sustainably? Call it as a premium sugar or sustainable sugar, or
You see, this is a big question I've always been asked. If I produce this sugar, where am I going to, will I get a premium? There are two ways to look at it. Number one, when you get certified, Bonsucro certified, especially both on the farm and the factory, your overall production costs do come down. Because like
There's
I said,
already
yeah,
profit written into it.
yeah, because in the sense, like, if I'm using less water, I'm paying for less water. I'm using less fertilizer, I'm paying for less. So that is one reason why it is helping. And same is in the mills also. You have we have some 300 data points that they need to figure out. So if you reach those data points, your automatic
Efficient production.
efficiency comes in. Having given that, then you have to look for who is going to pay for this. Will you get a premium? Brands are looking at it the other way. They say, I will buy your sugar only if you're certified.
It's a mandatory, not a
So eventually it's going to get
nice to have.
Eventually you get efficiency. You may or may not get a premium, but you will be able to sell to certain brands only because you have this certification.
Right.
So it's getting there. We are pushing. The market is trying to push the brands to give a premium. But, it's always a give and take. Some do give a little bit of a premium for it, but not all. And in India, we are still trying to work that out because most of the brands outside India that pay are all here in India. So we're trying to get those brands to appreciate the effort on the ground by the mills here. But I think it's just a question of time when we'll get some premium eventually.
Right. For example, a large beverage maker might have it as a condition that we only buy sustainable sugar, let alone premium.
Correct.
Even to come in here, you have to be sustainably produced, right?
Correct. Exactly.
I mean, it's an interesting times we live in because I remember in the 1800s, there were sugar sold in UK twice as much.
Right.
Regular sugar was few pence. This sugar was branded as not made by slaves. That was the label on the box, and it was twice as much, £1.30 or something like that. This was 200 years ago.
Correct.
From that, where people commanded a premium price for sustainable sugar, to look, I am buying only if you are sustainable to start with.
Correct.
It's more like a mandatory or an obligation than a VIP service, right?
Correct. Yeah. So it is there. It will happen. We are able to also trade our Bonsucro credits on a Bonsucro trading platform.
Right.
So people do pay for our credits on a trading platform. So obviously there is a certain premium, but somehow in India we still need to get the Indian buyers or the Indian buyers or the branded buyers here or the brands in India to pay for this thing. A little bit of premium, but to me, the way I ask the mills is look at the efficiency. That's what your cost of investing in getting Bonsucro certified. You're actually getting efficient production, and that's where you should really be focusing on more.
A few rapid questions. So one word for Indian sugar industry.
Complicated, but you're talking Indian sugar policy, you mean?
Indian sugar industry.
Indian sugar industry, I would say highly efficient.
Okay.
Under the circumstances.
Sugar for ethanol or sugar for exports?
Depends on the market. Whatever pays you more. If ethanol is paying you more than your export, then go for ethanol. If exports are paying more, do exports. So I think being flexible is the most important part in this business.
One habit you have inculcated that keeps you sharp in your business?
Being aware of what's happening across, both in terms of policy, in terms of production and all that. I think if you are fully aware of your environment, then you can be successful.
Any startup or company that you admire in the agro-tech space, sugar space?
Well, there are a few companies that are thinking out of the box and doing new products. And I think the biggest one obviously today is Balrampur, going in for bioplastics. Then you have a lot of chemical products being produced by, Godavari Organics, Bioorganics. They are doing a lot of interesting new products from using base as ethanol. So, these are the companies that I would admire the most. Again, there are others who have gone extremely efficient.
Right.
So, and groups like Dalmia and Triveni and all, they're doing very efficient productions. So,
Your 3 or 4 word summary for ChiniMandi.
Mandi, well, all wishing you all the best. I understand your IPO is coming, and you guys have grown so much in such a short period of time, and hope that you keep growing as you are growing.
Thank you. Sir, one career advice that you would like to give young and emerging professionals and entrepreneurs?
In the joy of others lies our own. Simply because if you're associating with people who work with you, work for you, your other business associates, if they are happy, then you're going to be happy eventually. So in my opinion, you have to ensure that it's a win-win in everything that you do. If it's a one-way street where only you are making money and the others are not, then it's not going to last.
Thank you, sir. That's deeply spiritual, but thank you. Thank you so much. Thank you so much for being on our podcast. It's been a pleasure talking to you.
Thank you. Thank you for having me.
Right.